take on board your suggestions. I will spend more than 25 minutes on this question. That's the end of oral questions.
首讀
Bill, first reading. Financial Institutions Resolution Bill. Bill, second reading. Secretary for Financial Services and the Industry and the Treasury, President, I move the second reading of the Financial Institutions Resolution Bill. The Financial Institutions Resolution Bill, the bill, seeks to establish a cross-sector resolution regime to resolve in an orderly manner systematically important financial institutions, FIs, which become non-viable, so that they can continue performing critical financial functions to safeguard the financial system's stability. In this connection, the bill confers powers on the Monetary Authority, MA, the Securities and Futures Commission, SFC, and the Insurance Authority, AI, and seeks to enhance the resilience of the financial systems and protects public funds. The too-big-to-fail phenomenon observed in the recent financial crisis highlights the dilemma faced by the relevant authorities in various places in the case of systematically important FIs becoming non-viable, allowing the suspension of financial services, thereby dealing a great blow to individuals, companies, or economic entities which depend on such services, or using public funds to rescue financial institutions and uphold their operations, but at the same time asking the public to shoulder the burden and undermining the self-regulatory practices of the market. The resolution regime led by the Financial Stability Board and agreed upon in the international community seeks to deal properly with local and cross-border systematically important FIs which may become non-viable. The key attributes of effective resolution regimes for financial institutes, KAs, released by the Financial Stability Board have become the latest international standards. As a member of the FSB and an international financial center, Hong Kong pledges to implement fully the latest standards in the KAs. The main legislative proposals of the bill are as follows. 1. Scope. The bill proposes that any FI that could be systematically significant or critical, if it fails, should be subject to the regulation of the bill. Such includes all authorized institutions under the Banking Ordinance, certain financial market infrastructures, globally systematically important financial institutions, and licensed corporations under the SFO, which are globally systematically important financial institutions. Authorized insurance under the ICO that are globally systematically important issuers, and any exchange companies designated by the FS on the recommendation of the SFA to be within scope because they are considered to be systematically important. The holding companies and affiliated operational entities of the above within scope FIs and the overseas branches of within scope FIs are proposed to be covered under the bill. Moreover, the bill empowers the Financial Secretary to subsequently bring FIs that are not initially covered by the regime within scope if in future they should become apparent that systemic disruption could result from their becoming non-viable. 2. Resolution Authority, RA. The bill proposes that the existing financial regulators, including the Monetary Authority, SFC, and IA, are designated as the RAs for the banking, securities and futures and insurance sectors, respectively. Where an FI is part of a cross-sector group, the FS may designate a lead resolution authority. 3. Resolution objectives. The bill sets out resolution objectives to which the RA must have regard in the performance of its functions. These objectives are to maintain the stability and effective working of the Hong Kong financial system, protect depositors or insurance policyholders and client assets to no less an extent than they would be protected on a winding up of the FI, and contain costs of resolution and protect public money. 4. Initiation of resolution. The RA should consult the Financial Secretary before initiating resolution, and 3 conjunctive conditions must be met. The first is that the RA is satisfied that the FI has ceased or is likely to cease to be viable. The second is that there is no reasonable prospect that private sector action would result in the FI becoming viable again within a reasonable period. The third is that the non-viability of the FI will pose risks to the stability and effective working of the financial system of Hong Kong, and that resolution will avoid or mitigate those risks. 5. Stabilization options. The bill provides for the following stabilization options: transfer of some or all of the failing FI's business to a purchaser or a bridge institution, transfer of assets of the failing FI to an asset management vehicle, statutory bail-in, i.e. write-off or conversion into share of liabilities of the failing FI, and, as a last resort, to transfer the failing FI to temporary public ownership. The consent of the shareholders or creditors is not needed when the RA implements the above measures. The bill also provides for preparatory powers for implementing the above stabilization options, including the power to suspend the right to terminate a contract ahead of schedule. This is to ensure the continuation of the key financial functions of the FI to be resolved, and that it can still discharge its responsibilities under the contract. 6. Safeguards. The bill provides for various safeguards based on KAs and a checks and balances systems for the powers conferred, including 1. According to the principle of the NCWOL, pre-resolution shareholders and pre-resolution creditors would be entitled to receive payment of compensation should their outcome in resolution is worse than would have been the case had the FI was wound up. Second, establish 2 appeal mechanisms. One is Resolution Compensation Tribunal, dealing with claims in relation to NCWOL compensation. The other is Resolvability Review Tribunal, dealing with appeals of FI affected by an RA's direction to them to take measures to remove impediments to resolvability. 3. When the RA implements stability options, it should ensure the cost effectiveness of certain financial arrangements, for example, writing off or making net settlement arrangements. And 4. A person is not civilly liable for acts or omissions done in good faith in performing or performing a function under the bill or assisting a person in such a performance. 7. Funding. The funding and losses for resolution should, in principle, be borne by the shareholders and creditors of the non-viable FIs. However, the regime allows for temporary public funding support to help non-viable FIs if needed. The bill provides that after the conclusion of the resolution, the RI can recover the cost from the wider financial industry through an ex post levy. This will be done through a resolution to be passed by the Legislative Council. However, in the case of FMIs and exchanges, a user-pays levy is proposed, as the orderly resolution will result in continuity of critical financial functions of these institutions, and those in the sectors can benefit. 8. Cross-border resolution. Hong Kong is an important business center and home to many branches of cross-border FIs. As such, the bill reflects the main principles of the KAs in dealing with cross-border resolutions, so that the local RA can support or recognize cross-border resolutions after certain conditions have been met and after consulting the Financial Secretary. On the proposal of establishing a resolution regime for FIs in Hong Kong, the government has held 2 rounds of public consultation last year and this year. The majority of the public views collected recognize the importance of setting up a local resolution regime. The government published the conclusions to the consultation exercise in October this year, outlining the various views raised. President, so I speak, and I hope that members can support and pass this bill as early as possible. Thank you, President. I now propose a question to you, and that is that the Financial Institutions Resolution Bill be read the second time. In accordance with the rules of procedure, the debate is now adjourned, and the bill is referred to the House Committee.